Drawn liquidity is one of the most important concepts of trading because if you don't know where the market is actually drawing towards, your TP itself will be flawed. You don't know where you're targeting. And if you don't know where you're targeting, you can't even enter the trade. It is generally one of the most important things and one of the things that helped me quite a lot. And now, before I get into all the source and all that stuff, this video is not going to be edited at all. And so if you cannot sit with that and if you just need all that scrolling, if you need all of that scrolling because your brain is just so dopamine based, you need all that dopamine every single second, click off right now. This video isn't for you. This video is just very low editing, no editing actually. So yeah, anyways, let's get into it. So what drawn liquidity actually gives you is it gives you clear A+ targets. That's what it gives you. It gives you A+ targets, and for example here, New York lows. Session liquidity is one of the strongest drawn liquidity points. So that is what you want to target. This right here was New York lows. I targeted New York lows and then it eventually hit. Now this trade, because the drawn liquidity, I'm showing you this trade first because this trade, it nearly hit my stop loss. Now, yes, the trade got saved because the stop loss was actually like a 1RR trade. But if the drawn liquidity was over here or over here, if it was anywhere there, it would have hit me out, stopped me out, and then progressed wherever it wanted to, whether that be lower or higher. So if your drawn liquidity itself is wrong, it is, something that isn't actually there, there's no confluences towards that drawn liquidity, you cannot take that trade. You just can't take that trade. So New York lows, session lows, New York, Asia, London, those are pretty good lows to target. Now over here, you can see my drawn liquidity is this. This was all-time highs right here, and entered, exited quick. This is another trade. This is actually the example from before. No, this is a different trade. We have SMTA at the highs, boom, and then we had confirmation, drawn liquidity right here. Again, what am I reiterating? That this is session liquidity. Session liquidity is the strongest drawn liquidity points. Asia, London, New York, highs and lows. Those are the strongest points because the most amount of orders are there, which is why they are session liquidities. Those are session highs and lows, swing highs of sessions where there's a lot of orders, so there's a lot of liquidation to happen and money to be made. A lot of market, move is there. So you can see here, with a spot on drawn liquidity, we're going to get into how to actually identify the correct drawn liquidity. With a spot on drawn liquidity, when the TP is hit, what happens? As soon as the TP is hit, price just reverses completely to my stop loss as soon as it's hit. Now, if this was even a bit higher, boom, I would have been stopped out. If the drawn liquidity that is there isn't strong enough, if there isn't enough confirmations, then you cannot enter that trade. You simply can't enter. You just have to wait and wait. That's all. So if you don't know where price is most likely heading, you are cooked. You are cooked. If you enter the trade, that is, okay? So this is a bit worded wrong. If you don't know where price is actually heading, right? Of course, this is trading. No one knows where anything's going to actually go. But 9 times out of 10, if you don't know where price is actually going, you don't have that clear drawn liquidity point, that is like, what are you doing? Like, what are you doing at that point? You shouldn't be in the trade. So let's go back to the basics. What is drawn liquidity? Simply where market is heading towards to liquidate orders and to make money. It's as simple as that. Now, there are 4 reasons the market moves. 1 is to rebalance to inefficiencies. Inefficiencies is fair value gaps, buy side imbalance, sell side inefficiency, sell side imbalance, buy side inefficiency. Fair value gaps. That's one of the reasons the market moves. Another reason is to generate liquidity. I will actually show you on TradingView, but this is of generating liquidity. All of this is sell side liquidity being generated. Sell side, buy side. I'm not going to go into that stuff in this video. This is just strictly drawn liquidity. And then hunting liquidity. Boom. When this move happens, what's actually happening is all this liquidity here is being hunted. And also rebalance to equilibrium. I don't really use that. These 3 are the main ones. So let's say we have 2 fair value gaps, bearish, bullish. Generation of liquidity is one of the reasons market moves. As you can see, market is generating liquidity to do what? To rebalance to this inefficiency. The bigger the inefficiency in terms of time frame, the stronger, because it took more orders to actually make that inefficiency, make that fair value gap in the first place. Market is, going up here to rebalance to this inefficiency whilst generating liquidity. All of this is sell side liquidity. That's generation of liquidity. Generating liquidity, rebalance to efficiency, rebalance to inefficiency to eventually do what? Hunt liquidity. Now, it's not in this order. This is just a framework to make you understand what's going on. So when this happens, what is going on is this is the draw in liquidity. Now, this could be session draw in liquidity. So when I'm going short after confirmations, what am I doing? That is what I'm doing. I'm targeting this draw in liquidity. I'm targeting this draw in liquidity right here. As soon as that happens, market is now, it could do this, it could go lower, or it could do that. I don't really care. All I care is getting in and out and taking this draw in liquidity. So that is very important. To understand the draw in liquidity, you need to understand, first of all, why the market is moving the way it is. All right, now let's actually get into how do you get an A+ draw in liquidity, which should hit 9 times out of 10. Trading, probabilistic environment, no one knows what's actually going to happen, but we play with probabilities, which is, like a casino, we play with probabilities, and that's how we win. So how do you get a draw in liquidity, A+ draw in liquidity that should hit 9 times out of 10? Wow, that highlight was cooked. So how do you do that? How do you do that? Answer's right here. Fair value gaps, displacement. This is literally all you need for a solid draw in liquidity. Fair value gaps, which fair value gaps are holding, which ones are not holding, which ones are getting invalidated, and displacement. Out of that fair value gap, how is price reacting? That is how you determine a draw in liquidity. So now we will go into this. Should I go into it right now? Now, okay, we'll finish this first. Sometimes you won't have an A+ draw in liquidity. All right. So what do you do? Simply, if you do not have an A+ draw in liquidity, it's simple. Just sit back, relax, watch something, play some games, just don't trade, okay? Don't be a dumbass and trade if there is nothing to trade, okay? Simple. Here, for example, the draw in liquidity was here. And then another session liquidity was here. Now, why do I not target this draw in liquidity? It's because market open has happened, displaced a bit, like a lot. We edged these draw in liquidity, and then there's still so much points remaining. Probability of actually hitting at market open for the, from 9:30 to 11 EST, very unlikely 9 times out of 10. So what do? I wait. That's what I do. Now that is discretion. That's discretion. That's just building discretion, and you just build discretion through journaling every single day, understanding what can I improve, understand, what I did wrong, what I did right. So if you guys want a full trade journaling PDF, link is in the description. All my days, I can't talk. Join my free Discord, and it's right there. All the questions you need. So this one right here as well. Once again, this is the draw in liquidity. I do not target this draw in liquidity. I don't target it because it's not strong enough. It is not a strong enough draw in liquidity. It has already been edged. A lot of the times, if a draw in liquidity has been edged like this, it won't hit back in. It's just a liquidation. And so I didn't enter this trade, save myself from a loss. You have to enter only the best draw in liquidities. A+ draw in liquidities. It's not just about identifying draw in liquidity and entering a trade. It's about only taking trades that are A+. And an A+ trade requires A+ draw in liquidity. We in NQ, so we can just replay this. Hopefully my internet doesn't freeze. Okay. So, boom. For draw in liquidity, you really want to be looking at the higher time frame first. 4 hour, what's happening? Bullish trend. We're displacing. What do we have here? By the way, this indicator session destroyer gives you the session low and liquidity points. We have this. We have New York highs. I believe green is New York. We have New York highs here, rebalancing to this inefficiency. You can see this inefficiency. I'm going to scale down to the 1 hour just because I want to see, what's going on in the 1 hour. Because 4 hour, it's cool, but 1 hour gives me a bit more of a nice condensed view. Okay, so we're rebalancing here. We have this. We have taken out that. Let me see. That is, you see this 5 a.m. candle. This is not this is a bad draw in liquidity. This is still a good draw in liquidity, but this is session draw in liquidity. Session draw in liquidity, once again, is a stronger draw because there's more orders there. It is session high. just from what I'm seeing here, I'm seeing we're displacing. We have, confirmed this trend here. We got this going on. Fair value gaps are closing above these highs. Just from price action and see from fair value gap. Which fair value gap is being respected? This fair value gap is being respected. What does that mean? Draw on liquidity higher. Is there a draw on liquidity higher? Yes, there's a draw on liquidity higher. Also, we have another fair value gap forming. Now, what do I want to see? I want to see displacement. So I drop what? Historical data? Okay, well, actually, yeah, this works better because displacement of the hourly gaps. How is the hourly gaps displacing is really where you'll get the draw on liquidity. Draw on liquidity, you will understand it from the hour and the 4-hour time frame mostly. Just from this alone, what do I expect price to do? I expect price to liquidate these highs. Of course, this video is just a draw on liquidity video. It's not how to actually enter trades. Because you know you're drawing liquidity, you know where the market is going towards, but the precision of actually entering correctly and not having your stop loss too tight, that's a whole different story, all right? This is just drawing liquidity. Where do I expect the price to go? Boom, up there. So we could rebalance here, or we could go higher and then do the shenanigans. All right, boom. Let's see how this, okay, this is good. We're displacing out of this fair value gap. I want to see a stronger move here because this could be an edge. I will not be targeting these lows right here until this gap has been invalidated. Until this bullish gap has been invalidated, my draw on liquidity is higher. Literally just fair value gaps and displacement, bang. As soon as this gap is invalidated, that's the only reason I would be looking to do something like this. Besides that, I'm not looking for shorts, I'm looking for longs. All right, let's go for a different example now. Let's do select random bar again and see where the market drops us. I don't like this. Okay, no, let's cut that out. All right, this one is looking interesting to say the least. Session liquidity, first thing you open up, gaps, you can see gap here, no gaps here, nothing. This gap here, you can see this gap has been barely invalidated. So I am a bit more bearish here. Wait, hold up. What is this? No, that's invalidated. Literally, it's just fair value gaps. Fair value gap here. This is the fair value gap. I'm not going to draw it out in the 4-hour because the 4-hour is just overall trend. What's going on? In the 1-hour is where I really look for like nice drawn liquidities. All right, so just from this, okay, a bit of choppy price action here. Choppy price is just moving up and down, no real direction going on. Just look at the fair value gaps is all you need. All right, so from what I'm seeing here, once again, where's my draw on liquidity? It's there, and it's there. This is a bit more choppy. Even if the draw on liquidity here is there, just from the 1-hour time frame, I can't go into the 50 minutes, so I can't really see how much of the chop it is, but we're just gonna forget about that. Choppy PA, that's a full other video I could make, but just draw on liquidity. My draw on liquidity is higher. I'll only have a lower draw on liquidity at New York lows right here or London lows right here if this gap is invalidated. Besides that, it's looking bullish. So let's see how this plays out. We could rebalance, go higher, or we could just tap in and go higher. Also, you can see here, this gap is being rebalanced too. One of the, the reasons the market moves. So let's see how this goes. 1 hour. Bang. One candle, draw on liquidity is hit. Fair value gaps being invalidated, which ones are validated, which ones are holding, aka validated, which ones are not holding, aka invalidated, and from that, where is the session liquidity? You can also target, like here, you could also target this, you could also target this, you could also target this, you could also target this. All of these are valid, but session liquidity is the strongest ones. But depending on discretion, depending on market, conditions, you could also target this. For example, if there was a gap here, oh, okay, there actually was a gap here. This is still a rebalance move. I would target this, I would target this, I would target this. With this trade here, because there is this gap, I would not target this here. Just because it's a bit too far away. So my target would be that, and also this, but the strongest target and the biggest target for, the best stop loss placement. Like that. it would be something like this. That would be the target right there. I wouldn't target, once again, why am I not targeting this point here at 12 a.m.? It's because, you know, I do want to see how this bearish gap reacts. Remember, it's gaps. The gap, like back to Myro. How do you determine draw liquidity? Okay, bro, come on, Myro, lock in. Fair value gaps, displacement. Fair value gaps, which ones are holding, which ones are not, and then displacement out of it. For our all-time highs, precision-wise, to enter in a all-time high trade, you know, you need a very strong retrace. But in terms of drawing liquidity, it's pretty simple. All-time highs, where am I targeting? Drawing liquidity is all-time highs. So what could happen in this scenario? Boom, boom, boom to this gap, boom. Or you just, you know, dump. You just need some confirmations, but the draw on liquidity itself, where is my draw? My draw is here, right here. This is Asia high and London. When is my draw on liquidity? Can my draw on liquidity be Asia lows in this scenario? Can it be this? No, because we're at all-time highs. There is no bearish higher time frame gap to support that idea. Can my draw on liquidity be this? No. Can it be this? Yes, if price closes below this. That is the only situation in which I can target New York lows. Besides that, my draw on liquidity is high, so let's see how this plays out. This is the 1 hour. Yeah. Let us see. Boom, boom, boom. Okay, we opened London. All right. See, now this is different. Now this is different. Let me go back here. Where was it? Right there. You see what happened now? This is the thing with drawing liquidity. What happened now is we have created a new bearish gap. So we are no longer, yes, overall, we're at all-time highs, but the confluences are potentially bearish as well. And so in this situation, what is going on? Now, I can potentially target Asian lows. I can also target this. This is not a session liquidity, but I can also target it, and I can also target this. Why can I target this? Because we are rebalancing to the inefficiency, which is one of the reasons the market moves. So now I am no longer long. With this trade, I am no longer looking for a draw liquidity here. Draw liquidity here is invalid. Why? Because there is a new bearish gap. I'm not about to long this shit here, hoping and praying that we hit this. Of course, the stop loss is going to be, you know, you get the point. I'm not going to hope for this to be hit if there's a gap right there. We could easily retrace in the gap and go lower. But yeah, now because the gap is formed, my draw is this, my draw is this. My best draw in this scenario is this, but also something like this. You know, given confirmations and given entry, that's another video. This could also, so this is kind of okay. Of course, session liquidity is the best one. So let's see how this plays out. Boom. Okay, I would go break even there. Or TP, you know, precision is different. Draw liquidity is the point of this video. Precision of entry is what I'm talking about. Currently, I'm still bearish. Still bearish. Still bearish. Still bearish. There's no bullish gaps being formed, and we have not tapped into a bullish gap for me to be bullish. Simply. Okay, now this. I probably, oh no, we did. Did we tap that? Okay, yeah, we did tap. We did go TP here. We did tap here. Especially if you edge TP, like this is the edge right here, because how much points is this? That is 0.25 ticks. You best believe you want to automatically close your position if you're 0.25 ticks away and it like does some bullshit in like the 5 minute or 1 minute. But we got hit here. All right, let us visit another random scenario. What is going on here, Chief? Overall trend. All right, interesting. Interesting. Okay, I'm a bit more bullish there. The trend one, you know, it's kind of just market experience, to be honest. The draw on liquidity is just looking at which gaps are being respected, which gaps are not, because the gaps hold orders, they hold pressure. So here, we are displacing from this gap and then we've come back into this gap. What? I can go into the 15-minute now? Say less. See, this is the thing. Like in the 1 hour, you can see that we're just displacing from this gap to this gap. And then the 15-minute actually gives you a much more nicer projection of what's going on. And what's going on? Choppy price action. Go to the line chart. You can see this very, very nicely. Choppy PA. It ain't it. It ain't it. There's nothing to go off because we're just displacing from gap to gap. You see this? We're just displacing from this to this. This is just choppy PA. Like, okay, now, did we close through? Not really. Not really. I'm still not adamant with where the draw is here. And then we're displacing arm. Okay. See, with things like this, in the 1 hour, it's hard to see. It's hard to see, like, you kind of see, oh, we got into this gap. Oh, this gap is kind of held to the tick, and then we're displacing up. Oh, wait, what does that mean? Wait, surely that means my draw in liquidity is London highs. Well, no, because if you just drop down to the 15-minute, which I couldn't in my previous examples, it's just chopping around. Like, it is just chopping around. Let me delete this. It's just chopping around. Like, what's going on? We're just displacing from this 15-minute gap here to this 15-minute gap right here. We're just displacing and we're chopping until we have some sort of confirmation out of those two gaps. It ain't it for me. Join liquidity simply really is fair value gaps and displacement. Which fair value gaps are holding, not holding, all that stuff, and displacement. So, no pressure, but if you guys want to learn from me one-on-one, you can go link in the description, or you can DM me on Instagram. All right.